Okay, so we're back. We're just gonna get started, but going into I kind of veered off into a strategy in terms of trading. You It's up to you as to what particular trader you want to be. You got swing traders, traders who like to scalp. It's just all on your personality. If you're an aggressive trader, you might see yourself more on the smaller time frames. And also you might see yourself using bigger lots. Some people are just meant like that. They're built like that. You just gotta find a specific niche in trading which fits your characteristics, your personality, and go from there. Also your time too. And so trading isn't just hopping on these charts and making the trade. It's really first doing a lot of homework and then a lot of us reassessing in what you know and who you really are and what time you legitimately have. You got to be real with yourself in that aspect. So yeah, just keep that in mind, okay? All right, guys. So we're gonna talk about GMT. We're gonna get back on track. So yeah, GMT is. I mean, for those who are familiar with military time, this is gonna work out so easy for you guys. Okay, so for example, oh, 1 second. So for example, let me pull up a chart real quick. Or actually, let's look at this first, okay? So for example, let's say I'm in Mountain Standard Time, right? Or actually, forget that. Let's say I'm anywhere in the world. And if you guys are familiar with military time, I can tell you any one of these times and you'd be able to tell what exactly time that is with, at that particular time, wherever you're at, okay? And so let's say it's 1300 o'clock. Well, 1300 o'clock is usually 1 p.m. 1600 o'clock is usually 4 p.m. no matter where you're at. If you see 1600 o'clock, that's 4 p.m., right? 2000 o'clock, right? That's usually 8 p.m. Or, yeah, 8 p.m. 2300 o'clock is usually 11 p.m. Okay, so just keep that in mind. So let's say, for example, you remember when I told you got 1400 o'clock? That's what, 2 p.m.? Or actually, let's go with 1600 o'clock. That's 4 p.m., right? So 1600 o'clock is pretty much saying 4 p.m. If you add 3 hours to that, that gives you, well, now we got to flip it because these double digits are representing in the U.S. These double digits represents the morning times, and these single digits represent the night times. And so this just pretty much means midnight. 000 means midnight. This means 1. This means 2. So forth and so on. So like this is really just 4 o'clock, but you add 3, that gives you 7. 8, you add 3 hours to that gives you 11, right? And so everything's normal up until we hit 1300. That's when you kind of got to do a little bit of math. But 1300 usually means 1 p.m. 1400 is 2 p.m. 1500 is 3 p.m. So forth and so on. And how I like to do it is, let's say we're at 1300. I usually just subtract 2, and it gives you a single number. So 13 minus 2 is 11, but that turns out to be 1 in my time. So 1300 is 1. 1400. So 14 minus, well, I just go 4 minus 2 gives you 2. So I'll kind of single out this last number here, and that gives you 2, right? So that's 2 p.m. 1500, 5 minus 2, that's 3. So that's 3 p.m. or 3. I'll just say 3 instead of p.m. because they're flipped here. So yeah, that's pretty much how you calculate. This is just military time, guys. If you're GMT plus 3, you'll convert this military time into regular time and then add 3 to it. So as I mentioned here, simply convert the GMT time zone back to normal, then add 3, assuming that we're using the MST time, which is usually GMT plus 3. If you're in Central Standard Time, that's GMT plus 4. Okay, so we go here. This is 2 p.m. 2 p.m. plus 4 gives you 6. Okay, or 2 plus 4 gives you 6. So, you know, just gotta just do that accordingly. So this is 20. You know, that this is really 8. 8 plus 4, 11, right? Or actually, hold on one second. This is 10, 8. That's actually 3, 16, 18. Oh yeah. I'm sorry, God. I actually confused myself. But yeah, I'm looking here. This is don't ignore this because we're thinking about Central Standard Time, and this is Mountain Standard Time, which is an hour before Central Standard Time, right? So let's say we're in Central Standard Time, and I see this 2000, right? It actually reads 8 p.m. or 8, and you add 4 to that, and that gives you 12. Okay, so forth and so on. This pretty much how you convert these time zone. And when you're trading these platforms, MetaTrader, TradingView, they have these times at the very bottom. Let me pull that up real quick. So here's MetaTrader 4, right? And so you guys want to actually look into, you know, how, you know, this stuff works. Look at the crosshairs. Look at the dates of the crosshairs and how they're working. You know what I'm saying? You see how you can just, you see at the very bottom they give you the time and they give you the date. So right here at this point in time, we're at 2200. Okay. Well, I'm in Houston. That's Central Standard Time, right? I convert 2200 into regular time. That's 10, and then add 4. You know, and they'll give you the time. So so that's pretty much how you want to work with these you know, with these crosshairs and the time zone as well. So you can see here we have 240, right? 240, and I'm in Central Standard Time, right? Well, just add 4 to that. That gives you 640, right? And bam. If for those people who are in Central Standard Time, they're able to witness that. Okay, well, you know, that's right. And you can back test. You know, you can go all the way back to this date right here. So this is what, April the 30th, 2018. That says 1755. That's really what you convert that. That's 555, and then you add 4. That's 955. So that's 955 my time, Central Standard Time, right? If you were in El Paso time, if you were Mountain Standard Time, you know, that would be 855 because Mountain Standard Time is an hour behind Central Standard Time. So that's how you guys want to look at it. Let's open up MetaTrader 4 real quick, or actually TradingView. I'm sorry. Let's see. Cool. All right, so it's the same thing here. I don't know if they have the crosshair deal. I mean, MetaTrader is different how they have their crosshairs. But look at this. As you see at the very bottom, you get the time, which says 1700. Now I didn't adjust this time, so it might be a little different, but it's the same thing here. They're actually using UTC, which is it's a newer way of measuring time, and you know I'm more familiar with GMT because whenever I'm using TradingView, I'm usually using the draw tools, being that I already have an idea of what time it is because I just came from MetaTrader 4, which doesn't have that much tool. So, but yeah, pretty much the general ideal of how this stuff works. Okay, guys, so just keep that in mind when you guys are trading. Okay, so let's go back to the PowerPoint. All right, so pending orders. All right, you may ask me, okay, well, what the heck's a pending order? Okay, well, a pending order, contrary to your more immediate orders, for example, your buy or sells, or pending orders are orders that you place ahead of time. So like you're just making your order ahead of time, just like if you would go to Amazon and just make your order online, and instead of being at the store and buying it immediately, and getting it immediately, well, you make the order ahead of time and it arrives into your house ahead of time, right? Well, you make the order immediately, but that, you really don't see much until, it arrives at your house. So, um, while we're talking about orders, I also want to point out that you guys should always be using a stop loss, always. Stop loss is just like a safety net. Now, I do know some traders that don't ever use stop losses, but I mean, that's just a risk to me because you're pretty much saying that nothing in the market drastically is ever going to happen. So if I'm trading EU, sometimes you can have unexpected news like a terror attack or something like that that just shakes the whole market, okay? So you just got to always have a stop loss, because without having a stop loss, you're pretty much saying that, okay, you're alpha and omega and you know what's going to happen ahead of time, and that nothing is really going to, move that market, which is almost impossible because there's so many factors in pairs that can just move it up or down, okay? Um, and then we're going to talk about take profit. So where you place your take profit is also important, but not as important as your, oh, I meant to say stop loss, okay? But yeah, so keep that in mind, all right? One second, we have a couple questions here. Yeah, so exactly. Daphne has learned her lesson with stop loss, and she's saying that it's actually best to use it, and I agree wholeheartedly with you, man. The day I lost $3,000 in 3 days was the day I realized, okay, it's time to use a stop loss. So hopefully you guys don't take that much of a loss before you can understand how much of importance it is to use these stop losses. But yeah, so keep that in mind. When you guys are out there trading, these markets are wild. They're very wild, and sometimes you may have market go in your not in your favor, like 100 pips, and they call those stop hunts. That's when institutional banks usually just pour in a bunch of money to hit everybody's stop losses and then go the other direction. And so, they call those market makers. Sometimes your broker can do that as well. So you just gotta be careful. You just gotta really be careful as to, like, how you trade, and that's why risk management. I talked to you guys about risk management. It's a big thing. So you guys look back on that video if you kind of aren't familiar with it, and just refreshing yourself. And also, look up on risk management. I gave you guys a website to go to help you guys as well. But with that being said, using stop loss is also part of risk management as well. So keep that in mind. Okay. All right. So more on take profits and stop loss. Okay, so what is the stop loss? Stop loss is a price level in which you want to automatically get out of a trade, assuming that price goes opposite of where you intended it to go. It can be placed at break even to also ensure a risk-free trade. Okay, so there's two purposes for stop loss, that you can have. Now, what is take profit? A take profit is a price level in which you would like to automatically get out of a trade, assuming that price goes exactly where you intended it to go. So you just take your profits, as the name is, suggesting. So, stop loss is pretty much stopping your losses, and when you hear take profits, you'll pretty much think about taking the profits. You're taking how much you made and then closing those trades. So, pretty simple when it comes to explaining those. Let's see if I can pull out an example in the market. Um, Actually, let me pull up an example for you guys. Gotta use a demo account because I don't want to place any trades. I don't want to place any trades that could affect my real account. I want you guys to see my personal information too. All right. Give it 1 second, guys. Y'all know how MetaTrader is, especially for you for the experience. Just gotta. Okay. Okay, so here, let's make a trade. Okay. Gonna use a penny. Sell this at a penny. I'm just gonna buy, or actually I'm gonna buy it, okay? So you just make your order and bam, you drag your stop loss. This is your stop loss. And if you guys can see this at the very left part of this line, the far left part of this line, it gives you how many pips you're losing, you know, how, and also show you how much dollars you're losing as well. Okay, and so just bear in mind when you're using MetaTrader 4, that section where it reads pips, that third number is a pipit. So you're not really worrying about that. So you right now you're at 84 pips. You're at negative 84 pips, not negative 849 pips. So keep that in mind. And same here. You're at negative 115 pips, but you're not at negative 1,000 pips. You know, that can scare people sometimes. So yeah, just keep that in mind. This is your stop loss right here. Okay, as you can see the abbreviation within that text on the left side, it says stop loss, or SL, which stands for stop loss. And it'll show you like negative amount of money you will lose if price hits you. So right here, let's say if I were to let go, it's showing me that, you know, you will be at negative 131 pips and you will lose $13 if price went your other way. Because I'm saying that price is going to go up. You know what I'm saying? So if price goes down, goes contrary to where I wanted to go, then bam. You then will be able to you know, see that. Okay, so make that trade. Bam. So I'm good. If price were to drop, price were to come here, and let's say I'm sleeping, price were to drop here, this order will automatically close, and I'll just take my loss and then, you know, wake up and be like, dang it. All right, and now conversely, you can also have a take profit, right? So 1.4064. All right, so here you have your take profit. I'm saying the market is going to go, oops, sorry about that. I'm saying the market is going to go up, right? So, you know, I buy at this price here, and once market hits this price here, let's say I'm sleeping, bam, this closes the order automatically, and whatever my profit is my profit. Okay, so, you know, that's how you want to look at it. Okay, that's how you want to make your trade. All right. So it's very important that you guys have your stop losses. Usually a trader will have their stop losses around 50 pips. Okay, so around here, their stop loss is around 50 pips, and that's just enough room. So, you know, just in case the market tries to spike a different direction usually. So that's just how, you know, the market works. And but yeah, that's how take profits are seen and viewed, and also how stop losses are seen and viewed as well, and how they work. So just keep that in mind. But let me ask, does anybody have any questions so far as to how this stuff works, or is everybody good? Everybody's good on this? Awesome. Awesome. Good stuff. Good stuff. All right. Let me get out of this. All right, so let's take profit and stop loss for you. Okay, so you also have different orders. Okay, now also notice that you guys notice how fast that was when I placed those trades, that bam, the trades automatically open. well, you know, just bear in mind, you know, how that stuff, how instantaneous it was, because pending orders is just almost the opposite. Okay, so you have different type of pending orders. You have a buy stop, sell stop, buy limits, sell limits. And I'll talk to you guys about how they work as well. So let's talk about a buy stop. Okay, buy stops is a predictive order placed above the current price in anticipation that price will rise up to that price level and then activate your trade. Okay, so for an example, let's see, for an example, oops, kind of lost track of. Okay, so NJ, NZD, Jaffy. Let me show you guys an example of exactly what a buy stop looks like. Okay. Ooh, see. Oh, here it is. All right, cool. So NJ. So let's say here, price is right here, right? Price at this point in time, price is at this level right here. And I'm saying, the moment price comes right here, I want to buy. But instead of me automatically clicking it and manually clicking it, I'm sorry, instead of me manually clicking buy, as I just showed you guys how to do earlier, you know, the robot pretty much will make a buy order for me. So let's say I'm sleeping, price hits here, bam, I'm automatically in the buy. And if it goes up from there, I'm profit. If it goes down from that level, then I lose, right? But we want to win, we want to profit. So that's what we're looking for, okay? So yeah, keep that in mind, right? That's a perfect example. So you hit play, and bam, price did go up. Price went up, and let's say my take profit was here, my take profit would have been hit, and I would have been out of that trade. Okay, guys? So yeah, just keep that in mind. That's what a buy stop, it's pretty much how a buy stop works. Okay, and if you're making an order on MetaTrader 4, what you want to do, where it says market execution, you go to pending orders, and then go to buy stop. And so, you know, let's say that I want to put a buy stop on, matter of fact, let's do EA. So yeah, let's say that I want to put a buy stop on EA, right? That does look like a buy. That looks perfect. Look at that. It looks like a shoulder, head, and shoulder formation. I might actually trade that after this session. But yeah, so anyways, yeah, so matter of fact, yeah, let's say this looks like a head, shoulder, inverse. That's actually an inverse head, shoulder, or shoulder, head, shoulder, right? So let's say the moment, we know that once price gets back to the neckline after that last shoulder is completed, we're looking to enter for a buy off the inverse head and shoulders, right? So, you know, why not? You know what I'm saying? So this is where we want to place our pending order right here. That will complete that shoulder, right? So if you guys look to the right where my crosshair has a price, the far right, it says 1.6056. So let me actually let me bring up my line. So right here is usually where that last shoulder would be completed, 1.6056. So that's where you want to place your order. So you go here, do a buy stop. Oh wait, we have a question. Oh, yeah. I might, yeah. Hey, you can't sleep on these opportunities now. I might see some. So yeah. So yeah, right there is where you want to enter automatically. Let's say if you're not at the computer, 1.6056. So you just type that 6056 right there. And if you put your stop loss, you also want to type it here, right? So let's say we want our stop loss to be right here, right? So that's about what? It's about a 60 pip stop loss, right? About 60 pips. But yeah, that's at price 1.5996. Okay. Bam. There you go. I'm not gonna have a take profit. I wanted to just run. Okay. So look at this, guys. I'll place that trade. Let's move this line out the way. Oops. Let's delete this line. Okay, let's move this back. All right, so the moment, and we're not in the trade right now at all. I'm not in this trade at all. It's not running because price is right here at the moment. It's at exactly, let me bring my crosshair. Price is exactly right here. The moment it rises up to here, and if you guys remember how these inverse head shoulder works, or shoulder head shoulder works, you know, this is where you want to enter, okay? So yeah, just keep that in mind. Let me do a quick scalp real quick. Let me see what's going on with this pair. Oh, I know you did. All right, so as you guys see, look at that. 30-minute also, and that's what I was talking about, right? You guys gonna make me do a trade right now. Now let me stop. But yeah, so that's what I was talking about, right? You go back down to lower time frame and you see the same thing. You just get a better entry off the lower time frame though, and you can see what's going on. Okay, so yeah, this is once price goes up here, you know what I'm saying. Let's see what the 15-minute. See, the 15 minutes kind of wishy-washy now. You can't really see that obvious. Let's see what the quarter hourly is. Oh, so the quarter hourly is giving you a little head shoulder as well. So yeah, guys, you just gotta, you know, there's opportunities everywhere. You know, you just gotta look into them. So yeah, that's a perfect opportunity. But yeah, right when price hits that level is where you guys want to enter. Okay, so just keep that in mind. You know, when trading and using pending orders. All right. Let me speed things up because we're kind of a little bit behind time. All right. Let's see. Where was I? Okay, cool. So we talked about buy stop. Now let's talk about. Ooh. All right, let's talk about a sell stop, which is the opposite of a buy stop. So a sell stop is a predictive order placed below the current price in anticipation that price will drop down to that price level and then activate your trade, right? So let's go to this pair called NJ. Check out NJ. Okay, here's NJ. Wait. There's another NJ that I was referring to, because that's a buy stop example. Okay. Let's see. Interesting. Okay. Okay, let's talk about this pair right here. And so here, you see that price is here, right? And so the moment price gets to this level right here, I want to activate a sell order. If I'm not by the computer, bam, this trade will activate in a sell manner, right? And I can have my stop loss and take profit if I wanted to. So, you know, let's play it out. Let's see if price does drop to this level. And it does, right? Price drops here and then goes up, as I mentioned it would do. Okay, now that's pretty much how you want to look at your sell stops. I mean, it's just the opposite of a buy stop, guys, and you know, nothing really too difficult to me. It's just placing the order ahead of time, okay? All right, so now let's talk about a sell. Oh wait, I have buy stop. Okay, hold on one second, guys. Let me see if I can pull up this example. I think I was on the wrong slide. Okay, so let's go back. Sheesh. Yeah, guys, we kind of run a little bit late. This is usually around my bedtime. But yeah, UCAD, matter of fact, it's a good example. Okay, so you see this right here? This is the neckline of a shoulder, head, shoulders, and we know we always this orange line is the neckline of a shoulder, head, shoulder. We always enter off that, as I talked about earlier, for a sell opportunity, right? So the moment that price gets around here is where I want to start my sell. Right now, price is up here, but let's say we fast forward, bam, price drops, and we're in that trade. Price goes from here, actually from here all the way down. The lowest it went was here. Then the red rose back up, but I probably would have gotten out of that trade by right there. Okay, so yeah, that's how that works, guys. Sell stop. Now, do we have any questions so far? Everybody's good. If you have any questions, just feel free to stop me because I know I might be moving a bit fast, and we'll go from there. So let's talk about a buy limit, guys. Okay, let's talk about a buy limit. So what a buy limit is, so, and you slide to where I was just at. Okay, so this same pattern can be used to symbolize a buy limit. Okay, so what a buy limit is, let me talk about that first before I fast forward. Okay, so so a buy limit is when you place a pending order below the current price in anticipation that price is going to bounce up from that current price level. Price is pretty much going down to that price you predicted to then activate your buy order. Okay, so for example, let's talk about it. So here, let's say I think price is going to go up once it hits here, right? So right now I'm predicting the order under price because price is above me. Price is above me right now. And I'm saying that the moment price gets right here, it's going to go up, right? So the moment price drops to where I say it's going to drop to, I place a buy automatically. And if the price goes up that way, I profit. So look at this. There you go. Look at that. Price dropped, went up, and I profit. Now, price just kept dropping, I wouldn't profit. So keep that in mind, guys. It's pretty simple stuff with these pending orders, nothing too cray-cray. I know for sure when I started off, it was pretty confusing, but I think how I have it laid out, this is perfect stuff. You know what I'm saying? Okay, now the sell limit is just the opposite. Okay, a sell limit is predictive order placed above the current price in anticipation that price will go up to that price level and then activate your trade. Price is pretty much going up to that price you predicted it to go to then activate the sell order. In other words, you're expecting price to bounce down from that price. So let's look at an example on GBP CAD. GBP CAD, slide 3. All right, cool. Yo, what they do with my music? All right, cool. All right, so yeah, I need some sleep though. I ain't gonna lie. No, let me stop. So GBP CAD, let's see. Okay, here it is. Cool. So let's say that I think price is gonna, actually 1 second, guys. So this should have been a sell stop for me. But yeah, so it's the opposite of buy limit, okay, guys? So let me pull up let me see something. Actually, let me see if I can pull up an example. Hey guys, feel free to freestyle if you feel like it. I know I always do, especially to this beat. It just came to my mind, sorry. But yeah, so what would be a sell limit opportunity? Okay, this is a perfect example here. Let me set it up for you guys. So you'll place your sell limit, let's say, so let's say price was here. Say price was here, you expect the price to go up. And the moment price gets here, you'll go into automatic sell and just profit from there. So it's the same thing, guys. You know, we're a little bit short on time.